Minister, I'm happy to speak briefly on this very important issue here this evening. The bill, as we know, seeks to provide a risk equalisation mechanism for ongoing sustainability of the private health insurance market, while also maintaining health insurance policies at an affordable price. It will also provide for a reduction in stamp duty levies on advanced health insurance contracts, which will decrease from 2021 to €406, and that's a decrease of €43, and on non-advanced health insurance contracts, which will decrease from 2021 to €122, a decrease of €35. That is certainly welcome, but it is also a belated action. If partial recognition that prices for health insurance are simply astronomical at this point and significantly out of the reach of so many people, especially those with chronic or long-term health conditions or indeed large families. I note that Section 4 of the bill before us amends Section 7F of the Principal Act by that it deals with the benchmark for reasonable profit, and that this section is being amended for the purposes of assessing if an insurer has been overcompensated by the scheme. I think that is one of the key areas and issues of this entire debate that we have to address, Minister. What is it exactly that determines a reasonable profit, and how far may a health insurance company go in settling costs? Clearly, it is the case that in this area, just like motor vehicle insurance or business insurance, we have a sector that is not always as transparent or open to public scrutiny as it should be. We have all seen how insurers responded to COVID and indeed the forced closure of SMEs and local traders. It took High Court action to challenge the insurance to make good on policies that people had paid long and hard into. And that should not have happened. It shouldn't have been the case. I felt, and I did raise this issue here on behalf of businesses, that the insurance companies should have been fairer and more reasonable. Some years ago, the European Commission itself informed Insurance Ireland, which is the Association of Irish Insurers, of its preliminary view that it breached EU antitrust rules by restricting competition in the Irish motor vehicle insurance market. Many people absolutely have the sense that there is a similar level of market restriction in terms of health insurance. The government's position is that our community-rated health insurance market means that the cost of healthcare insurance is shared across all members of the market, and that in general, with certain exemptions, everyone can buy the same policy at the same price. Insurers cannot alter their prices based on an individual's current or potential health status. But this is a regulatory version of wishful thinking. In the consultation conducted by the Health Insurance Authority in January of this year, it was recognised that in a community-rated market, without a robust risk equalisation scheme, insurers with lower risk profiles will tend to be more profitable, all else being equal. As a result, in the absence of a robust RES, insurers will be incentivised to do the following: design products so that they are not attractive to older and less healthy customers, which, as we know, is called risk selection, and segment their customer base by age or health status so that older and less healthy people pay more for insurance, or market segmentation. We need to ensure that insurers are not allowed to engage in such practices, and that all people who want it can afford a different level of comprehensive health insurance. Really, it's about making sure that there's fairness for everybody, and that everybody who needs health insurance, and indeed who wants health insurance, can avail of it in a fair and just manner. Thank you.